How to overcome the fear of investing. Most people are initially hesitant when starting to invest in the stock market. A significant part of their concerns, also one of the most substantial obstacles for most investors, is the fear of financial loss. Many millennials came of age or entered the workforce during the Great Recession, and as a result have started their careers at lower salaries or not in their preferred field of work. The trouble is, fear causes you to ignore logic. And you have to battle yourself to accept the truth, and that's just plain tough. But there are ways to overcome this fear, and here are some steps to take. Fear number 1. I don't have enough money to start investing. Can you put aside $5 a week? $10 a week? Then congratulations. You have enough money to start investing for your future goals, whether that includes a home, wedding, or more flexible lifestyle. You might be able to find even more to invest by taking a look at your budget. There are many brokerage firms and trading platforms available to you with no minimum deposit required. These firms often offer investment options with low or no commissions or management fees. Many of these firms also offer investing apps for your smartphone. If you think $5 a week is too little, remember, compound interest and time are on your side, no matter how small you start. If you're paid bi-weekly and have $20 deducted from your paycheck before it hits your bank account, you'll have over $500 to invest over the course of the year, and you won't miss it because you won't see it. Fear number 2. I don't know enough about investing. If you're watching this video, it's because you've already taken the first and most critical step toward overcoming your fear of investing. You're educating yourself, seeking out information to help empower you and make better financial choices. When it comes to self-education, we all have to start somewhere, and online videos, tutorials, guides, and discussion forums are a good way to master basic knowledge. Many major financial services companies offer excellent, and free financial education materials. Also engage with others, like you, who want a better grip on their finances. Fear number 3. I'm afraid of losing all my money. You can't deny that it was scary when the U.S. stock market lost half of its value in 2008. However, that's not the end of the story. By 2012, the market was back on track and trending upward. While there is always a risk of losing money when investing, leaving your money in a savings account is almost a guarantee that you will lose some of the value of your money to inflation. As Robert Allen once said, "How many millionaires do you know who have become wealthy by investing in savings accounts?" The answer to that rhetorical question is none. Understand that while there are fluctuations, in general, the market has trended up over the long term. Consider the timeframe for your investment goals. When do you hope to retire, or semi-retire and pursue your own hobbies or interests full-time? Don't get hung up on the sensationalized news on social media or 24-hour news shows. It's important you don't make your investment decisions based on sources that offer dramatic, sensationalized spins on the latest market dip or the hottest new IPO. More often than not, things do not go as planned. Stock prices rise and fall, economies expand and contract, and investors with risky plans panic. Start small. Learn from your mistakes, and others, to minimize your losses. Bottom line. When your investments lose value, get back up and start again. If you've assessed your risk tolerance and chosen a strategy and assets that align with your goals, you're more likely to recover the losses. Patience is a virtue, as they say. It is even more so when investing.